Hello traders and welcome to another video review. Today is Tuesday the 6th of July 2021. Let's take a look at the Forex calendar. What do we have here? The first thing is that the Reserve Bank of Australia had made their interest rate decision today early in the morning, and the decision was to keep the interest rate at the level of 0.10%. So it was in line with the expectations. There was published a monetary policy statement, of course, and Governor Philip Love gave a speech at 8 o'clock. The other data from today are mainly from the Germany, where the ZEW economic sentiment, current situation, and survey data are being scheduled for release at 11 o'clock a.m. Of course, we have the same data from the whole European Union, and apparently there is another set of data in form of the retail sales scheduled at 11 o'clock. Those data are from the European Union as well. During the New York session, we have final services PMI, composite PMI, ISM services PMI data scheduled for release between quarter to 4 and 4 o'clock. All of those data are from, of course, the US. So the calendar doesn't look busy today, but the German data might trigger some moves on the market. Of course, the ISM services PMI, except the LBA interest rate decision, is the key event of today. So how the market reacted on the Reserve Bank of Australia interest rate decision? As we can see, the market never hit the 7,415 technical support, the key technical support. The low was made 7,445 pips. So this is actually a little bit above, around 30 pips above the key technical support. We have a bullish engulfing pattern. Yesterday there was a green candle on the daily time frame as well. Apparently it's not that wide, but today we are going up. We are going up again. We broke above 7,533 technical resistance, 7,588 technical resistance, but the daily candle has not been completed yet. It's not closed yet. So the next target is the high from the 25th of the June, located at the level of 7,618. So not that far away. If we break above this level, the other technical resistance is 7,648, and this is from all of these technical resistances, the key technical resistance in the short term, the very short term, because any breakout above this level would open the road towards 7,680, and of course towards this short term trend line resistance. So maybe the market will break above this technical resistance as well, which would mean that the Australian dollar is being heavily bought across the board, and the US dollar must be a little bit more in defense mode. So the people, traders, investment speculators might be selling this one. However, we are still trading inside of this range between 7,822, 7,415. This is the mid-term range for the Australian dollar, and to be honest, as long as we trade inside of this range, the direction in the long term has not been really established yet. So this is how it looks on the Australian dollar. Because the ZEW data from the German, let's take a look at the euro to the British pound. Euro to the British pound, as you can see, is kind of a trading inside of this channel. It's been trading in this channel since the high of the last day of the April this year. And as you can see, market pretty much respects this channel, especially the upper channel line. The slope is to the downside. Recently we had a bearish engulfing pattern again around this upper trend line. So there is basically not that strong trend on this market. Of course, it looks like it's the trend, overall trend is down, right? But it's not that strong. It's just it's full of whipsaws, it's full of false breakouts, but as long as we trade inside of this channel, nothing else can be done. with this situation. We had this technical support. Now it's not that strong anymore. I guess we should move our technical support to 8,529 pips. This would be much more appropriate in the near term. So this is the technical support. Of course, the resistance is still this upper channel line for the euro to the British pound. Let's take a look at the euro to the Japanese yen, because recently we got this bearish engulfing pattern, and I'm kind of curious how the market reacted on this pattern. Of course, the other day was the down day. Today we have, well, a little bit of a down day, because daily time frame chart has not been closed yet, but the candle is right now is a red one. Maybe, just maybe, if the reaction for the ISM data from the US will be bearish, then we can say that we are going towards 110.44, and of course towards 110.21. This is the key technical support, and we have the lower channel line as well. We are already trading below this technical support here, which was the high from the first day of the April, 110.98. That's pretty nice bearish engulfing pattern, but we've been witnessing this kind of a pattern before, so that's nothing new during this move to the upside. Not quite sure how to label this one. It looks like some kind of a very because there's too many overlaps, too many false breakouts. It is rather corrective in nature than impulsive. And if this is the high for the wave 5, this is the first leg of the correction. That might be some sort of maybe the bigger ending diagonal, or some sort of the complex correction to the upside. However, it means the market on the US dollar to the Japanese yen should go lower soon, if that's the correct scenario. And let's take a look at the crude oil prices, because something interesting is going on here. As you can see, we are keep going up inside of this acceleration channel. Recently we broke above 75.16. The recent high was 76.89, and we are targeting the next technical resistance. So let's take a look. Where is the next technical resistance on the crude oil? And as you can see, that was the high from 2018. We are above 2018, so the crude oil is on the highest level since 3 years. We might be closing this gap. Okay, so let's just put it on our chart. We might be closing that gap here. This gap is, as far as I can see, between the levels of 78.4, 79.45. That's pretty good target for now. In the long term, you see we are here. We might be closing that gap. So where is this on our chart? Yes, there you go. That's the gap. This is now technical support. Let's just put it on green, and 75.16 technical support. We might be closing this gap, this recent gap. We might be closing it. So pretty interesting thing. 78.4, 79.45 is the next target for the crude oil traders. Technical support 75.16 as well. The next one might be somewhere here, 74, 74.8. So far the biggest correction during the acceleration phase is 4.39, and this one I guess will be smaller than the previous one. Might be even 2% maybe. There you go. Oh, 3%, 3.38. So that's something like that. And since the end of the June, there was no red candle. We have only green candles targeting 78.4, 79.45. That's everything for me for today. Thank you very much for watching, and I hope I see you guys next time. Bye bye.